The US dollar index broke the 100 resistance level, a level not seen in over 12 years. Emerging market currencies are under pressure. The ringgit continues to be hammered down as the momentum in the dollar's strength is expected to last until Donald Trump assumes office in January next year. Also playing a role, expectation for a December rate hike by the US Federal Reserves, expected to be announced next week. Now, how low can the ringgit go, and when can we expect the slump to end? Our correspondent Tan Chung Han asked these questions and more as he spoke to Jameel Ahmad of ForexTime, a leading international authority on world currencies, to get his insights on the outlook for the ailing ringgit. Let's have a look.
Okay, Jameel, thanks for speaking to us here on Ringgit Sense. Always a pleasure to see you again. Now, let's start with a question that is probably most pertinent on many a Malaysian mind. How low can the ringgit go?
Basically, the ringgit can go lower as long as the dollar continues driving higher. And this is what I need to point out here. This is a dollar story. It's complete dollar domination on the currency markets. So the ringgit is not the only currency that's fallen. Yes, domestically, it's causing some concerns. It's doing it to the British pound. It's also happening to the euro, the Japanese yen. It's a global trend. The dollar's dominating the currency markets. But to finalize your question, how low can the ringgit go? It depends on how high the dollar can go as well.
Now, do you have a house call in terms of numbers here?
Well, look, we think the area between 450 and 460 is a key level. I do not believe in these projections that we can already be speculating on 480 and 5. It's a bit premature because a dollar rally can fall like this. It can fall like a house of cards. So what I would look out for, and we had the same call for the dollar CNY, by the way, is if we do close above this 450 to 460 level, it sends a next uptrend because investors need to be educated towards both the technicals and the fundamentals. Until we go above 460, if it happens, we can't talk about 480.
Now, we'll go more into those fundamentals in just a bit. But here's the thing. Yes, you do point out it is a global story. Many other currencies are being affected by the dollar. But yet, it appears that the ringgit is disproportionately affected by the dollar's rally. And I'll illustrate it with this. For the first 8 months of this year, the ringgit is the second best performing currency in Asia. Until recently, it's now the second worst performing currency in Asia. That is quite the 180 there. Why so?
It's quite a roller coaster, right? A lot of sensitivity towards the dollar. What it could be, different factor, is because the currency strengthened so much after the dollar weakness earlier this year, it's just retraced and resumed its position. The ringgit is sensitive towards the dollar, I do admit that. But these are global trends as well. Rupiah has been impacted, Indonesian rupiah has been impacted, Malaysian ringgit, two very close nations. But yes, there is sensitivity. I would say that it's a market retracement gone from the second best performing currencies in the region to the second worst performing currency. These are dollar-inspired moves, though. If you were to say that we add into this some domestic concerns, domestic risks, concerns on how the local economy is performing, then I would say there's more at play here. But it just seems to be sensitivity towards the dollar, to be blunt.
So this appears to be more of a global story right now. So besides the dollar rally, I'm sure there's the Fed, Trump winning the presidency, oil, of course. Do you see those same factors at play moving forward to 2017?
Well, it's been a crazy year, right? We would hope that there wouldn't be such unforeseen circumstances in 2017, such as what we've seen this year. Low oil, geopolitical issues, political risks. But yes, these factors at play are likely to remain themes. Remember, we've got political risks in Europe next year. That's where the real political risks, right? European politics. Populism wasn't emerging in the States or the United Kingdom. There was political issues in Europe. And now we've got elections next year in Europe. So we're definitely going to see political risks there and more European headlines. But there's a lot of uncertainty because we still do not know how Donald Trump is going to form his cabinet and his supporting administrative task. And something that nobody's pointing out yet, and I don't know why, man. I don't know why. Donald Trump, on his stimulus policies, I understand why the dollar's got higher, but this gentleman is also promising trade protectionist policies. If you have trade protectionist policies, you need a weaker dollar. The opposite's happened, which means at some stage, this dollar rally should fizzle out. if Trump wants to adopt these trade protectionist policies. And if he doesn't, those policies will not work, and it means the dollar story and the dollar momentum will be a problem for the US itself. Not for Malaysia, not for Indonesia, not for any other currency that's seen on a global level weakness. It's a problem for the US to handle.
So we'll see how those uncertainties and problem, as you call it, how they will manifest itself to the domestic market. We'll explore that in just a bit. Right now we're going to take a quick break. You're watching Ringgit Sense. Don't go away. We'll be right back. Thanks for sticking with us here on Ringgit Sense. My name is Han, and I'm joined by Jameel Ahmad of ForexTime. Now, Jameel, earlier we spoke about the global factors that are weighing on the ringgit. Let's shift our focus now to the domestic side. Now, you've got local entities. I'm thinking the Ministry of Finance, the central bank, saying, look at our fundamentals, focus on that. Yet, foreign investors, they're not buying it. They're not, really latching onto that narrative. So, question is, what can domestic entities do more to really enhance that narrative?
Well, what I would do is look at the narrative, although we're talking domestically, on an international level, all foreign investors focus on the Federal Reserve. US interest rate policy, US interest rate outlook, of course this is going to impact domestic investment as well from an outside point of view. But what we need to do now though as well, talking domestically, fundamentals are fine. Growth is strong and at robust levels and very reasonable in a very challenging external environment. And the external environment is international. But domestically speaking, we're looking pretty strong. Yes, there could possibly be some new initiatives to be introduced in the future. Maybe they want to stoke domestic demand some more support to small, medium enterprises. We've seen stimulus measures introduced in Indonesia. There is more that possibly could be done, and there's scope if they want to do it. But foreign investors, they just focus on the international scene. They want outlooks and projections on the Federal Reserve. Domestically, strong. Growth above 4% in this environment is something to be positive about.
That's a keyword you use there, scope. Now, is that more on the fiscal side, or is that more on the monetary policy side?
I would say it's fiscal side.
Okay.
Not just in terms of government spending, but I would say more towards to do with government initiatives, what they could do to encourage consumption or to help small, medium enterprises. Maybe this is providing jobs to enticement to hire locally and other enticements. Let's remember on the monetary side, we're only a few months past an interest rate cut. And there's a lot of volatility in the global markets right now. So let's say we hypothetically now, Bank Negara cuts interest rates again. Is this a knee-jerk reaction to the dollar move? Is this, inspired somewhere else? Right. That's why, on a monetary standpoint, I think stability is the best way forward.
Well, knee-jerk perhaps not, but in the words of the new Bank Negara governor, he calls it a preemptive one, and he did so back in the middle of the year. So could there perhaps be another preemptive cut, in light of the uncertainties that you highlighted on the global scale, especially when we look at 2017?
The interest rate cut was definitely a big surprise. I was surprised. Really, I did not expect an interest rate cut in July, the middle of the year. Basically, I know why they've done it is to inspire domestic growth and domestic lending and consumption. So yes, on the basis as if they really want to drive domestic spending, the same ways that Indonesia and India have done over the past year, they can lower interest rates more. But with the recent market volatility and to avoid knee-jerk reactions, there could be inflation risk domestically, which we could speak about in a couple more months once the ringgit weakness gets filtered through. That would prevent the scope to limit interest rate policy. So I think on the monetary front, stability and consistency is the way forward. Government-wise and from other policy members, yeah, maybe there are some initiatives that can be brought forward. But it's still the international environment that's dominating things right now.
Certainly. Now, while Bank Negara may not have that scope to cut interest rates further, at least not right now, it doesn't mean they have not been doing anything. They have been hogging the headlines with their intervention in the Forex market. So when it comes to balancing out maintaining investor confidence on one hand, right, letting the markets do their own thing, versus trying to stem that volatility, really control the ringgit's performance. How do you find that balance?
Well, firstly, thankfully, the central bank has reserves in place because if you didn't have reserves in place, you wouldn't have what we call the money for a rainy day. I think this is the old saying. The buffers now are much more than what they were last year. I remember last year, towards the end of the summer, we were talking about being below 100 million in FX reserves. Now strengthened from that point, so there is money at hand. But yes, it's something that should not be done regularly, because then the markets know that the central bank are concerned and that they're having to throw money to protect the currency. But on an individual circumstance and to stem very dramatic volatility, the scope is there, the reserves are there, and there's nothing to be worried about, because guess what? Exact same things happen in Indonesia. Bank Negara are not the only central bank who have been active when it comes to FX reserves and spending the FX reserves. It is happening elsewhere.
But yet the foreign reserves have remained stubbornly below 100 billion US dollars, which when compared to our regional peers, doesn't seem that we have that much ammunition left basically in our arsenal. So, and that was not a football reference, by the way. No, but so that would then, would that not entice foreign investors to then hammer the ringgit even more?
Not necessarily.
Okay.
What I would say would be more concerned if, let's say, we have reserves under 100 million, I believe, on a consistent level, and let's just say then there is concerns on a domestic level about the Malaysian economy, and then there's international concerns about Malaysian economy, then the ringgit can really be hammered into the floor. Then those reserves will have to come into play. But thankfully, if we look at it from a different light, these are international motives, and this is dollar strength. That's the reason for the recent weakness, which means the reserves can come into play, and that Bank Negara can be quite calm on that front. But yeah, if that situation changes, and if there are huge domestic concerns, and the ringgit then does hit another lower level, then yeah, the reserves would have to be used very sparingly.
Right. Now, in light of all of those factors at play there, we have seen capital outflow already. For example, there was the net inflow in Malaysian equities, up until about a month ago, and now it's a net outflow, net selling by foreign funds when it comes to Malaysian stocks. Is this inevitable? Will this continue?
It is inevitable when it comes to the US interest rate policy. And that's why, the market is 100% certain. I know, what a crazy world we live in, right? Crazy year, now we've got 100% confidence in the Federal Reserve. That's new, but the Federal Reserve should be pulling the trigger this month on rate rises, which explains why there's been foreign outflows and less inflows. But we then need to look in towards 2017. What's the monetary outlook? What is projections for interest rate rises? Because if the Federal Reserve raise interest rates at even faster pace than expected, there's going to be even further outflows. But if the Fed say, actually, you know what? Donald Trump winning the election does not change our monetary outlook. We're going to maintain a slow and gradual pace and monetary tightening. These inflows can come back.
Real quick, with the few seconds that we have left, we'll end with this. We've got the second Minister of Finance, Dato Johari Abdul Ghani, saying the long-term value of the ringgit against the dollar should be 380. Do you agree?
Difficult. This is going to get into the question on whether the ringgit is oversold or not. But that's against the dollar. What I do is look against the basket. And what's happening with the ringgit, it's a global dollar story. And if you track the ringgit against other currencies, it's much more consistent. But yeah, if the ringgit was falling against every currency, literally every currency and not just the dollar, we can talk about these speculative values. But at the moment, it's natural. It's natural what's happening.
All right, so it's natural, but we still got to hang on to our hats and just ride out this roller coaster.
There's a lot of uncertainty ahead, and there's reasons why people must remain calm. And just remember that what's been experienced is not just happening in Malaysia.
All right, got it. Jameel, thank you so much for your time and your insights there. Certainly appreciate it, and we look forward to hearing from you again in the near future, hopefully.
It's a pleasure.
That was Jameel Ahmad of ForexTime, and I'm Han, and this is Ringgit Sense. Thanks for watching.